And so we're going to talk about spotting repeatable patterns tonight. I want to talk about planning your trade off of the pattern. And that means sometimes planning an alternative trade, not just buying the stock. And then finally, executing and managing the trade with your broker. Now, my history in the markets is a long one, but I'll make it really quick. I started in 1986. I knew nothing. I learned just enough to be dangerous. I then proceeded to lose all my money, and even money that wasn't mine. And that date was October 19th, 1987. So after that, I got to tell you, I was flush that day when my broker called me and said, hey, we got some good news and bad news. I can't believe they even said it to me like that. I got good news and bad news. The good news is we got you out of those trades that you were in. The bad news is that you owe us money. So just give you an idea, started with a $5,000 account, and then I more than tripled it. And then within one day, it dropped to -5. And they were getting me out right when it went through. By the time they got the orders filled, that I owed them $5,000. This was 1987. And so I took a whole year to pay them back, and then also decide whether or not I really wanted to do this. And so in order to do this, I needed to learn more. So I started looking at fundamental data. And then I realized that was better used. Most fundamental data, not all, but most fundamental data is more for investors. So I started looking at technical data. And I remember the first piece of software I had, it was called Metastock. And I was using it on a compact 386 computer. It was a DOS version. And I saw the very first indicator that I'd ever seen before. It was called stochastics. And I looked at stochastics and I looked at the price. I went, this is it. This is all I need to know. The holy grail of indicators. Lo and behold, I didn't realize then that this indicator was a lagging indicator like most others. If you ask me what indicators that I use in my trading, I use volume. I use volatility. And I also use seasonality, which I'm going to talk about right now. And so, seasonality is one of the ways that I spot my plans and I create my rules-based trading. So for Convergence 2024, let's talk about the 3 convergences leading up to the election. Convergence number 1, we've got economic strength right now. I mean, we're coming, this is a multi-year cycle. We are now in a cycle where more than likely, there's no guarantee to this, but more than likely, we will see a continued ease on interest rates. I just saw some news that came out today, which is probably going to push rates lower. And it's not the strong economic data that we've gotten. It's the fact that mortgage rates actually went up. Even though we cut 50 basis points, the mortgage rates went from 6.12 to like 6.5% in the last couple of weeks. And of course, that's not looking good for the consumer, especially someone who's looking to come in and buy a house. They're saying to themselves, why are interest rates going lower and mortgage rates going higher? And of course, it's the market, but that might lead the government to come in later on and press rates to go down, right? We also have that buy in November. That's a 6-month pattern. And we've got the election term pattern, which is the one I'm going to show you now. But a lot of people forget about the presidential election cycle, which is a 2-year pattern. So of everything we've got here, other than what I'm about to show you, the election, the patterns that most people see are 6 months or longer. They're not made for traders, they're made for investors. I want to share with you some 60-day patterns that we can use in both the stock and the options markets. Before we do that, though, I want to go back into history. I want to talk about the last 25 years to spot these patterns. This is how my research began. So I went back to the millennium, to the beginning of the year 2000. And we had a presidential election between George W. Bush and Vice President Al Gore. So Vice President Al Gore is looking to get a promotion. George W. Bush was a governor looking to get into the White House. Now, this was a really contested election. If you remember, the Hanging Chads of Florida decided the election. And we had already been in we were coming off the bubble being bursted in the .com era. And so I think that hurt Al Gore. And so things were tilted slightly to the Republicans. So coming out of that election, defense stocks like Lockheed Martin did well. Also healthcare stocks And and a lot of that was because of the favorable consideration that Bush was giving to the healthcare sector. Now let's fast forward to 2004. Here we got the incumbent Bush going up against Senator John Kerry. So if you remember, 2004, we had 2001, and that was when the World Trade Center got hit. And so we were coming off of that. Bush was coming off a really high approval rating. We had tax cuts happening. We had deregulation happening. And we had, the older energy stocks like Exxon and Chevron performing very well because of the pro-energy policies during the Bush administration. And also financials did well. Goldman Sachs, JP Morgan are just a couple that did very well under the Bush term. Now we go to 2008. We all know what happened in 2008. And I believe what happened to Al Gore back in 2000, the same thing happened to Republicans in 2008. Coming into 2008, the market was pretty much down. If you remember, we had a top in 2007. We dropped into 2008. In fact, we didn't make a low until March of 2009. But that worked for President Obama and his change election campaign. So there were some volatile markets after the win, but the markets started to turn around and did well during those periods. So what did well? Gold and precious metals. Companies like Newmont Mining did well. Barrick did well. Then you got defense stocks like Northrop Grumman and General Dynamics did well, even in the economic downturn. Because you got to remember, the first year of Barack Obama's presidency, the markets were all over the place. Volatility was sky high, and it was elevated for quite a time. All right, then we jump to 2012. So we got incumbent Obama against Mitt Romney. And so we already had the recovering from the crisis. A lot of people had to put their faith in Barack Obama. And those first 4 years, we saw the stock market rebound. We saw unemployment rebound. And it looked like a pretty easy victory for him. The other thing we started seeing between 2008, 2012 was this birth of technology once again. So you had stocks like Apple, stocks like Alphabet, and those were the technology stocks. United Healthcare, as well as a lot of healthcare stocks, did extremely well because of the Affordable Care Act. So that's the sectors that really popped during that 2012 or after the 2012 presidential election. So here comes 2016, and I mean, unexpected victory from Trump. I think a lot of people did not expect Trump to win. In fact, what was it? There were bets out there 100-1. Someone put won $1 million off of betting for Donald Trump to win the presidency. Anyway, we saw again that same kind of rotation into finance, rotation back into energy, and rotation back into defense. So you saw stocks like Bank of America, JP Morgan going higher. And then again, here comes ExxonMobil once again. Here comes Schlumberger. For every one piece of legislation we're going to put in, we're going to take away some rules and regulations as well. And so less restrictive policies helped for Donald Trump in the presidential election. And, coming into 2020, I have to say, I really thought it was going to be a two-term election for Trump. COVID really changed a lot of that. And so you have Donald Trump and Joe Biden head-to-head. And so we really had that COVID-19 pandemic. It was a really weird election, right? But we can see that Joe Biden became president. And then we saw a big change. We saw almost a 180 change. So out went old energy and in came renewable energy. So Nextra Energy, First Solar had these surges during the first couple of years of the Biden administration. Technology came back in play again. You got Microsoft, NVIDIA. They outperformed a lot of the tech stocks. And then we saw Pfizer and Moderna. And I can't stress that, I wanted to talk about that a moment because they really popped because of the development of vaccines. Okay. So out of all of the last 25, when you consider 2020 as one of those years, 25 years, we take that 25 years of data that we see. and we add in the 3 convergences that are happening right now. That's what I want to do. And the thing is that when you look at that 25 years of data, you're looking at stocks that performed in months and years. All right. When you look at the convergences, once again, we're talking about 6-month to 2-year patterns. So while this is all great, I have to say it again. What about shorter term patterns? What about shorter term patterns for stock and option traders? Because that's what I'm most interested in. So for this election, what we're going to do is we're going to take the money calendar, and I tweaked it. I reverse engineered it. I tore it apart, got under the hood, and I looked at just bullish patterns that start in November, but not just in November of every year, but in November of every 4 years, November of that the election falls on. And I was looking for patterns that happen 100% of the time going back from 2000 to where we are now. And I'm going to show you those patterns in just a moment. But for those of you, the few of you that came in that have no idea what I'm talking about when I say money calendar, what is a money calendar? Well, money calendar is, simply put, it's a seasonal calendar that I have. All right. It's a piece of proprietary software that I've had now for 10 years. And there's been some folks that have been with me and some in the last 10 years that have used the money calendar. And what the money calendar does is it takes millions of data points on hundreds of stocks, and it sifts through those, and it's looking for the best patterns that have a start date of now and a future date somewhere in the future. Give or take, I say between 20 and 40 days is what I really like to look for. So looks like a calendar to start. And I take those 10-year patterns, and the only way it ends up on this calendar is if it has a 90% or better pattern of historical success. Now, we also color code the calendar. Green days, when I see green on the screen, it tells me I have more bullish patterns than bearish. If I see red on the screen, I see a lot more bearish than bullish. And if it's yellow, it's somewhere in the middle. If you look at the calendar I have up right now, this is October, the first 3 weeks. And here we are coming into week 3. It's all bullish. You know, some of you might be thinking, but I thought October was a bearish month, Tom. It used to be. But in the last 10 to 20 years, we've seen a shift. And the shift has gone from October to somewhere between mid-August to mid-September is where the bearish seasonality has moved. All right. It has slowly slid forward. And I believe it slid forward because a lot of people believe that October is a bearish month, and they're getting out ahead of time, just in time for all of us who are seasonal traders to realize that this looks worth getting into right now. So, you know, you look at today's date, and this is I just pulled this from today. 99 stocks hit the list today. 96 of them are bullish. Only 3 are bearish. So what I do is I click on this date, and it opens up the opportunities for that day. Now, what I've done is I've blown this up for all of us to see because I want you to focus on a couple things. First of all, this is the top 7. All right. I ranked this top 7, and I'm going to tell you how I ranked it in just a moment. But you can see the symbols over on the left-hand side. Now, these number of trades are something new that we're looking at because you're looking at the very first upgrade to the money calendar since we put it out 10 years ago. So we started using it 10 years ago. We made some major upgrades to it, and we just now are now using the upgrades. So when I'm putting together a pattern for a stock, and it's a seasonal pattern, the first things I look at is how many days is the pattern and when does it end? I know it starts today when I'm looking at today's data, but how long is it going to be on for and when does it end? Because it gives me an idea of, you know, how long that pattern is going to be. The other thing it does, if you're an option trader, is I look over that end date and I see, all right, where's an option that has an expiration around that end date that I can work with? So keep that in mind. Next thing I look at is the accuracy column. Yeah, I did say 90% or better. And you might look at that and say, well, Tom, these are the ones that are on money calendar are all 90% or better. Yes, but I like to see if there's any 100%ers on here. Right. So I'm showing you the data from just popping off the money calendar today as an example, but there's going to be a trade here too. So So keep that in mind. The other thing I like to look at is average trade profit, because here I'm able to see, if something's 90 or 100%, if it's only going to give me a 1% profit, I'm happy to look elsewhere. So I can see here, I've got a 19% average profit in this stock. I got a 15% average profit in KLAC. Look at Alcoa Aluminum, 18.22%. These are averages per year, winners and losers combined. Now take a look at this red one for a moment. That's a bearish trade. Remember, green is bull, red is bear. That's a bearish trade, and it shows a 6.7% return if you were to short it from today all the way to Christmas Eve. There's your end date, okay? But the most important column on here, the most important column I'm looking at is the power meter. The power meter is a way of looking at all 10 years or longer of data. And I'm going back and I'm looking and I'm seeing, what did it do in 2014, 15, 16, 17, 18, etc. I want to see the profits coming in closer and closer to the last year we had. I don't want to see it deteriorate. I want to see it getting better and better. And that puts it into a positive number. Positive numbers tell me that it has a positive power meter. That's how I rank these. So when I looked at these, here's the stock that was at the top today. It says AMBA, AMBA. It has a start date of today, and it ends on December 13th. It has a 19% average return during the pattern. So armed with that information, if you're a trader or if you're an option trader, you already have 99% more information than most people. Because if you're looking at a trend, that's great. You could look at a trend on the stock and say, hey, I think it's going to go up here. And I think it might go here by then. But you're just looking at something that's happened just in the last couple of months, maybe. What I'm doing is I'm actually taking data that goes back 10 or 20 years, 25. I'm going to show you here later tonight. And in that 10 or 20 years, I'm able to go back and see exactly what it's done, the best day to buy it, the best day to sell it, and what those average returns look like. Because if I can get a price target and a time target, I have everything I need to be an option trader and to be what's called an objective option trader. Objective means I'm following rules. Subjective means I think something's going up. I'm not a subjective trader. So that's AMBA. This is AMBA stock price recently, trading right around $60. And you can see this stock went all the way up into the 200s and it's fallen apart. But during every pattern that happens between now and the middle of December, it's gone up 9 of the last 10 years. So here we are. We're near the top of the 1-year range. I like that. And so it's just a matter of taking the information we have and saying, oh, with a December 13th end date, then I need to look at options that expire after December 13th. Well, A and B options, the closest ones are January. They don't have December options. So January options. So I look at this and I say, all right, 60 call options. They're trading for 6.5. So the 60 call options is going to cost me almost 11%. But if the stock moves 19%, that means this option could almost double in value, right? I mean, if the stock's going to move 19%, let's say 20. Let's just say 20 just because it's easy to understand. That means the stock can move 12 points. So if I were to buy the 60 call and the stock were to go to 72, that's 12 points higher than where it is right now. What are these 60 calls going to be worth? Well, they're going to have a minimum value of 12. If I pay $6.50 for them, that's higher. The 12 is higher than 650. It's almost a double. That's exactly what we do, folks. All right. You spot the opportunity. Okay. Then you plan the trade and And I'm going to show you a couple of trades tonight that one looks great and one we got to do a little bit of work with. But they're both on top stocks for the election. But you spot the opportunity, then you plan the trade around the opportunity. And then finally, when you're ready to go, that's when you go ahead and execute and manage. So this was an example of how we use the money counter on a regular basis. Now, what I did for the election strategies I'm going to show you for Convergence 2024 is I took the money counter. Remember, I basically took it apart. All right. It's kind of like rebuilding an engine. And I went for the data And so what I did was I tweaked it from a 30-day money calendar to a 60-day election calendar. We're only looking at election years only. I'm only looking for 100% winners. And those winners got to be, election dated to December 31st. So basically November and December. Here are the results of my research. So if we have a Trump win in November, we're going to look at energy, traditional energy we're finding. And so what I did was I looked at traditional energy and I found the stocks that in the last 6 elections, 25 years back, going back to 2000, here's stocks that went up all 6 elections, but I believe they're going to go much higher for President Trump because they fall in there in the Republican wheelhouse. XLE, that's your energy select sector, Recent chart of it here, right next to President Trump. And you can see what I'm showing you is where it started the year out. Below that would be a negative. Above that's a positive. It has pulled back a bit, quite a bit. It's almost pulled back to where it started the year out. All right. But keep in mind, we're looking at this seasonally. We're looking at this as election. And, you might want to think, well, wow, with the overall stock market making new highs throughout the year, it'd be great to find some value. Well, XLE might be a great value. Take a look at the next one. This is the Aerospace Defense ETF, ITA. Now, it is closer to its all-time highs, or not all-time highs, but its yearly highs for 2024. And we expect to see ITA make a big run up before year's end. And then finally, XLF. Let's not forget the financials. It worked in the past administrations where Republicans took the White House, and it is also done. It's a 100%er over the last 6 election cycles, and I believe this one will outperform with a Trump win. So that's XLF. Now, my favorite stock out of all 3, I've got the 3 sectors, and I pulled a stock out of my favorite sector and did some more analysis on it. Here's what I've come up with. This is Schwab, Charles Schwab and Company, SCHW. So SCHW, you take a look at this and you'll see that in a regular, if I'm looking at every single year across the board from the year 2000, we see November and December that it has an 85% accuracy, and that is true. We see that it has averaged 11.5%, including the losers. That's true. But you got to remember, if you just look at the years where we had election years, then there were winners each and every year. So I take this information, I go look at Charles Schwab, and I say, all right, here's where Schwab is today. We had that big jump up because of the because of some earnings announcements, but we're still predicting it's going to go up another 11% and move up to 79, possibly 80 by year's end. By the way, guess where this is? 79 or 80. If it just comes up and meets the area that it was at its highest back in May, then it will have done its job. Now, we could buy the stock at 11 and potentially make 11%, but what about the options? Can we make more with the options? So here are, and once again, let's think about this. All right, it's an 11% potential move between now and the end of the year. So I need some option that expires in December or January. Here are the December 20th expiration. That's the last Friday in December, the 3rd Friday in December, and it's right before the holidays. And we all know in the holidays, volume tends to go down. So unless I'm staying into something well into January, then, as a trader, I'm going to move out of the way by 3rd Friday. So 3rd Friday, I'm looking at the 70. If you look at the at the money options, okay? So the at the money options, and I'm actually looking at the 72 halves, because with the stock closing near 72 today, 72 half is closer than 70. So the at the money calls, slightly out of the money calls, going to cost about $2.70 or $270 a contract to buy. So question to you, how much are these options going to be worth minimum by expiration if we expect Schwab to increase to $79 a share? If Schwab goes to $79 a share, what are these options worth? Well, if you take 79 and you subtract 72.50 from that, you get 6.5 points. So you're talking about an option that you pay $2.70 for, that if it hits our target would have a minimum of $6.5. Is that more than a double? Yes or no? Yes. It's better. It's much better than a double. So that's an example of a stock where we spot the pattern, and we can immediately look at the call options and say, yeah, these look good. These look really good. And, if you look at the implied volatility, it's in the low 20s. That's why buying call options on Schwab may make sense going into the last 2 months of the year. Again, no guarantees, folks. I'm a pattern trader. I'm not a 100% guarantee. But, when I see the same thing happening over and over and over again, that's the direction I'm going. All right. Let's talk about a Harris win in November. So I'm of the mindset that if Vice President Harris gets a promotion and becomes the president of the United States, becomes president-elect, becomes president, she's going to have to go back to the progressives. And she's going to have to go. She's been said the most progressive senator, and now one of the most, if not the most progressive vice president that we've had. So I have to think, no matter what she's saying before she gets elected, if she gets elected president, she's going to move back to her platform and her basis platform, which is going to be a couple of key sectors. And I'm pretty sure you guys all know what we're talking about. Let's start with number one, solar energy. So the ETF, the Invesco Solar ETF, TAN, it came out of the gate strong after President Biden won the election back in 2020. But it slid, and in 2024, we saw it open around, it had a high of 52.5 and went down to 37.5. It's bouncing a bit, but it's down for the year. This looks like a value trade if President Harris comes in and gets elected. By the way, it's went up in all prior 6 election timeframes, but I think it'll really take off with a Harris win. The battery network, LIT. This is the lithium battery tech ETF. It started the year out around $50 a share, went down to 35. It was down 40%. And it's still in the mid 30s, but I believe this one too could get a boost, could get a supercharge if Harris wins the Oval. And the third ETF I'm looking at is XLV. That's the healthcare sector, because I believe that that a lot of the healthcare stocks and companies would breathe a sigh of relief, no matter how much we talk about drug prices. I can tell you this, and I'll bet almost everybody that is watching this right now can agree. Healthcare premiums keep going up. They keep going up. I pay for catastrophe healthcare insurance. We just looked at it and we've just said, we'll pay for the catastrophe stuff. If we got to go to the hospital, yes, and so I've got a doctor, I've got a concierge doctor that I pay for, so that I have the doctor visits. But the only way I'm going to end up paying, having healthcare kick in is if something really goes wrong, because the premiums are off the chart. And so that benefits the healthcare sector, this XLV sector. So number one stock, you're not going to believe this one. This is the hedge of all hedges. The number one stock that I have if Kamala Harris takes the presidency, guess what? Is Tesla. You might be saying, how? Elon Musk is stumping for President Trump. How? Because Tesla, at the end of the day, is an EV company. Tesla, at the end of the day, they're a battery company. They're an alternative energy company. They are renewable. They're renewable, whether you like it, whether they want to say it or not. When President Biden invited all the automotive engineers, this was a couple of years ago, to the White House, he didn't invite Elon Musk. who was the pioneer of electric vehicles. And so, you take a look at that, and that was that was intended. But still, at the end of the day, it's a win for Tesla. I think it's more of a win for Tesla if Harris takes the chair in the Oval Office, because the mandates will continue. They'll probably be extended. There might even be added, improved, benefits you can get by buying an electric vehicle. And they can't single out Tesla from this. They just can't. So that's my pick for November if Harris wins. And if you take a look at Tesla, you can see it's kind of been all over the place. It's been below $150 this year. It's been up close to $300. It's been creating these lower highs and higher lows and getting into this consolidation area. And so, you're seeing it around $220 right now. With the projections, with everything we've looked at, we see it up about 10%. So 10% of 220 puts it around 240, maybe 242 to be exact. And so if you take that price target, that 240, 242 price target, and then you look at options on Tesla that end on December 20th. I looked at the December 20th options. The at the money calls cost $20. They're right down the middle. They're $20. So you're talking about $2,000 a contract to buy that Tesla December 20, 2024 220 call. And if we go to 240, how much are they going to be worth? What's the minimum value of a 220 call if the stock price goes to 240? 20. If you paid 20 for something that by December 20th, if we're at 220, you're basically you're breaking even. So I look at this one, and we've spotted the opportunity. Okay, that's true. But when we come to plan the trade, and we look at planning the trade, we have to look at something other than buying a call option. Look at the implied volatility for a moment. It's in the 50s. This thing is more than twice the value of what we were looking at with Schwab. The options are expensive. In this case, you got to do a couple of things. Maybe you sell puts. All right. I've done well selling puts on Tesla. Maybe you buy call spreads where you're able to really kind of hedge that volatility and hedge the prices too. That's where you buy a lower strike call, sell a higher strike call. You could buy a lower strike put, sell a higher strike put, and put a put credit spread on as well, right? Those are the ways that you achieve return on risk with this particular pattern. So that's the Tesla calls. All right. So when you take a look at everything we've done so far, you can see that longer term patterns, such as the 4-year presidential cycle, the 6-month Biden November sell and go away in May cycle, these are cycles that are longer term patterns. You can see those by the human eye. You can look at charts and you can detail those. And the other reason you can detail them too is that they're really only used for the overall stock market, the Dow, the S&P, maybe the NASDAQ, but that's it. If you want to look at shorter term patterns, then that requires 3 things. You need a stock database. I look at 375 stocks. Okay. You need the data on those stocks. And I'm going back a minimum of 10 years. And because of those 2 things, you got to have software that does it for you, because you can't hand research that. You just can't do it. I remember getting this thing. It was called the Option Guide by Daily Graphs. I'm about to show my age right now, folks. And there's a lot of you that might know what I'm talking about. The Option Guide by Daily Graphs was something they sent to us in the mail, and we got it every week. So they'd print this thing off and they'd run it off to, thousands of copies and send it out around the country, probably around the world. And so we get this thing. And when I opened it up and read it, the paper, you could almost see through the paper. It was so thin. But I got to tell you, by the time I got done reading it, it took a week just to read it. And then the next copy came in. I mean, ask yourself, do you remember the Option Guide by Daily Graphs or anything that was thick on paper that had to do with, in this case, it was options. It was option patterns and such. You need efficiency to do this and to do it quick. I have that efficiency. And I want to talk for a few minutes about how you can gain access to the money calendar every single day. All right. Because You know, so I really believe this is going to be the most profitable election season that we're going to see in decades. And the thing is we didn't have this technology back then. I didn't have the ability to open up the money calendar and retweak it to share this information with you tonight. And I've given you some pretty cool election-proof stocks. Let me remind you, if Trump wins, we're talking about XLE, that's the energy sector, ITA, aerospace and defense, XLF, the financial sector. We looked at Schwab. That's my number one stock pick for a Trump win. And this is all between November and December. This is not buy and hold. And we looked at both the Schwab stock and the options, and the calls look good on that one. If Harris pulls out a victory, then we're looking at the solar ETF, that's TAN. We're looking at the lithium ETF, that's LIT. We're looking at XLV Healthcare and Tesla. And we looked at Tesla stock. We looked at Tesla's options. And it looks to me like we got to do something more than just buy calls because of the implied volatility. Now, for many of you, that's what you came for. You got those election-proof stocks, but hang out with me here a few minutes because I'm gonna do something I've never done before. Tonight, I'm gonna put the money counter directly in your hands, and I'm gonna do it on the Hub platform. All right, this is something brand new. For the very first time, I'm giving Hub members the opportunity to add the full power of my money calendar right into their Hub platform and on their trading arsenal. It's very simple, folks. When you join me tonight, you're going to get access to my money calendar, and we're going to immediately add that little money calendar icon to your Hub menu. All right. And that's an icon that's going to grant you access to all this stuff. So you'll have the Hub platform, and you'll have this new icon that pops up that says money calendar. You can click on that, and you can get all of the data, just like I showed you, that we look at every day. And I used AMBA as an example. You have access to all of that, right? It's seasonal patterns every day. You have the ability to click on the monthly calendar like I do. You have the ability to click into those and get the dailies. You can do the research just like I do, and you can see every single stock that pops up every single day. You can trade any market, not only the upside, but you can also trade these to the downside. All right. You can use options, and you can use options to perhaps double your money in the next 30 to 60 days on these trades. All right. And the really neat thing that you can do too is stay ahead of trends for those of you that use other patterns in your own trading, whether it's Elliott Wave, whether it is trending, whether you are using, trending, contrarian, statistical, maybe you're using volatility. This is one more area that you can go into, and you can utilize this as a confirmation. All right. I use the money counter as my primary, and I use everything else as confirmations, but that's me. But it allows you to stay ahead and use something that 99% of the folks out there simply either don't know it exists, or they don't know how they can get to the data and access this. All right. So when you click on the link, you can add the money counter to the Hub trading platform. It's $9.95, as you see on the screen. This is 58% off the regular price, and it's also locked in. And that means that it will never go up. All right. And given the potential I'm seeing in the next couple of months, not years, next couple of months, I think this is a steal. If you had the ability to look at the patterns that I'm seeing right now in the calendar, and this is outside of what I showed you in this event, this could more than pay for your subscription. So let me give you a couple of examples of how you could take the money calendar stocks and turn them into option trades. All right. These are real option trades. 219% in 10 days on Google. That would take $5,000 and turn it into $15,950. Here's a 3-week trade on Amazon that took $5,000 and turned it into $18,500. And here is a 384% trade in 3 weeks on AMD. Now, I don't want you to take my word for it, because a lot of folks that are using Money Calendar, and there are hundreds of stories I've heard from Money Calendar. Here's just a few, I hear these all the time. All right, here's a few of them. Pastor up there at the top, he says, I continue to win and have more than covered many times over what I have paid. I'm not going to read all of these. Michelle, so far the Money Calendar has been a breath of fresh air. And even Alfred says, I've always had good success with the money calendar. Catherine says she thinks this is the best service that we offer, all right, that my team and I offer. And thank you to all of you, not just who are on the page, but thank you to all of you who have written in, who have emailed me, who've talked to me, even in events such as this, and told me how the money calendar has really changed your life. And I'm excited about that. I really am. I mean, it's, there's a bit of vanity in why I do this. And the big thing I want to say to you now is that I want those of you that are not using the money calendar, I want you on the board. I want you on this board. I want you to be my next success story. So here's everything you're going to get when you join me. All right. We're going to give you 12 months of money calendar access on the Hub trading platform. You're going to get a free Hub account, which gives you access to the private social network of experienced traders. That's for those of you that don't have Hub. We're going to go ahead and get you hooked up. You're going to get 3 bonus election-proof stock picks, and these are the ones that I'm saving for members. They're poised to go up no matter who wins the White House in the upcoming election. I haven't shown those. Those are going to be for our members. And I'm putting the finishing touches on a 4-part money calendar video series that's going to guide you through step-by-step how to use this right on the platform. All right. So as soon as you click the link and you fill out the secure order form, we're going to process your order. We're going to get you access to that icon, which is going to be in the upper left-hand part of the Hub platform, ASAP. All right. So maybe you don't know whether money calendar's for you or not. I'm going to make it real easy. Try it risk-free for the next 30 days. If you're not happy for whatever reason, let us know. Let my team know within 30 days. We'll issue you a full refund. Like I said, if you're not satisfied, I'm not going to be. So, I will gladly refund your money if you just don't feel it's for you. But I'm thinking that you're going to like it. I'm thinking you're going to love it. So for just $9.95 today, this is what you're going to get. Once again, full access to my money calendar right on the Hub trading platform. You're going to get the 4-part video series. You're going to get the special report. I call it Unlocking Profits, the best trading opportunities between Election Day and December 31st. And you're going to get all of that at a 58% discount when you join. So once again, click on the button below. And as soon as you join, folks, you can start trading these 90 to 100% historically accurate patterns by the open tomorrow. All right. I'm Tom Gentile. Thanks again for watching.